Hey everyone, this is John Feneck of Feneck Consulting, and with me today is a returning guest, CEO Martin Turenne of FPX Nickel, based in Vancouver. The ticker on the TSX is FPX, and in the US it's FPOCF. Martin, welcome back.
Thanks, John. Great to be back on with you again.
So, you and I spoke last mid-September when the PEA on Baptiste had just been released. And what was the initial market reaction to that? And, what have we seen as follow-through since then? What kind of feedback are you getting from not only clients, but, competitors? Because that was a really eye-opening piece.
Yeah, it's been a great reaction. It was something I think that had been years in the making in terms of the work that we had done to improve the project. And so, a PEA that shows a project that has a 35-year mine life, very low projected costs in the bottom quartile of the cost curve, and a high NPV, NPV around 1.7 billion US on an after-tax basis. These are the types of projects that don't come along very often. And so we've been getting very good reaction, both from investors, both retail investors and institutions, actually. Quite a bit of institutional interest for the first time in quite some time for us, which has been gratifying. And we're also starting to see some interest coming in from strategic groups as well, larger companies for whom a project of this scale actually, moves the needle.
Fantastic. Well, yeah, we were clearly impressed with the results, and when you're looking at the marketplace at that particular time, the chart had run up quite a bit in advance of that, but then really the stock exploded on that news. I think it really took people by surprise. And then you had two analysts at Cormark and Paradigm respectively raise their price targets just after that, right, to $1 Canadian and $1.40 Canadian. So, do you think those targets are achievable in the next 12 months, being that they're, next year kind of goals? And what do you say about the value of your company versus the peer group right now?
Yeah, good question. So, I mean, certainly those analyst targets are things that we have no control over, but we definitely see that there's a lot of latent value in the company right now. We're trading in the range of sort of 50 to 55 cents Canadian. At these levels, we're trading for market cap in the range of about 100 million Canadian or so, versus our project, which shows an NPV, again, on a Canadian dollar basis of around 2 billion Canadian or more. So we're only trading at about 5% of our project value. And typically companies, base metal companies, at this stage of development in their projects can often trade anywhere between sort of 15, 20, 30, 35% of their project value. So we're trading at a fraction of that. We still think there's a lot of latent value there. And again, when we look at the peer group of other nickel projects out there, we see that ours has sort of one of the best return profiles out there in terms of the project economics themselves. But we're not at the top of the chart in terms of market cap yet. So I think there's more communication to be done to get the story out there to show that the project is among, if not the best nickel, development stage nickel project held by a junior anywhere in the world, with a lot of value to certainly get anywhere close to those analyst targets.
Sure. Okay. So we started to talk in this kind of format, I guess, in March or April, and nickel has moved from $5 a pound to about $7 a pound. What do you think about nickel going forward for the next 6 to 12 months?
Yeah, it's a good question. I think when the worst of COVID was hitting in March and April, and you had that kind of collapse in the financial markets, people really pulled back their demand estimates for nickel and other global industrial commodities. And I think the experience to date, particularly driven by strong demand in China, has been that those analysts at the time sort of overreacted. And these markets are actually far more robust from a demand standpoint than anyone at that time was expecting in light of the pandemic. And so what that sets up for in 2021, particularly if you've got positive news with respect to a vaccine and just kind of how the world is dealing with the pandemic, is you could have a real bounce back year, I think, for GDP growth globally in the world. And that lends itself to significantly higher demand for industrial commodities like nickel. So nickel now, is trading over $7 a pound after hitting, a low just below 5. 6, 7 months ago. We're still trading below, the long-term analyst forecast. We're still trading below the long-term sort of inflation-adjusted average nickel price over the last several decades. So we're nowhere close to being in a nickel bull market yet. However, I do think that is in the offing here in the early part of this coming decade, and so we think it's something that investors should think about how they position into.
Yeah, so I mean, we've all been waiting for some type of positive news regarding a vaccine, and we just got that. So I think that's going to, looking at the initial bump here, it looks like copper, nickel, palladium all had, a good reaction to that, which is very positive. I did a podcast with Bill Powers on October 26th, focusing on industrial metals, and was talking about your company along with a few others that I think could really benefit from a turn in sentiment. So, nickel is one of the key raw materials, obviously, for EV batteries, and there's been many rumors that Tesla maybe getting involved in the mining business, and Elon Musk, the CEO there, is very vocal. And so, what do you make of all of that, and how is FPX positioned to benefit?
Yeah, I mean, listen, it underscores and brings to kind of a mainstream light the fact, something we've known for years, which is that nickel is one of the most important, if not the most important, industrial metal that would facilitate the transition to an electric vehicle mass adoption in the future. There's a lot of nickel in each EV, particularly the Tesla uses a nickel-intensive battery chemistry where they have particular concern over their ability to access nickel units over time. And so when Elon Musk talks about needing nickel and imploring the mining industry for nickel, it's because they need a lot of nickel to be produced, and they need it to be produced at the lowest possible cost so that it allows for the mass adoption of EVs, which is their ultimate sort of strategic objective as a company. Whether that means that Elon Musk or other automakers or battery makers start to invest in nickel mines, that I think is still an open question. What's most important is which are the companies, first of all, that have deposits that can go into production in the next several years and actually serve that increased need for nickel from that industry. And that's what I think FPX is positioned quite well. Beyond that, without getting too far into the weeds, it's about the type of nickel that you produce, and the nickel that we produce is of a type that we believe can be used very efficiently as a feed for the production of electric vehicle batteries, and skip a lot of the stages of smelting and other refining and treatment that are required for other different types of nickel products before they're suitable for use in EVs. So the ability to produce a product that can more efficiently and more directly go into EVs means that we can likely produce that. We have a potential to produce that product for cheaper than the competitors, and therefore be a far more sort of strategic supply of nickel units to those types of automakers or to that industry generally.
Great. So yeah, I agree with you, and I think that just a little plug for your website, fpxnickel.com, for your listeners. I think they should check out the January 2020 article that came out. I think that was really great to kick things off here, talking about the type of nickel that you produce. And you follow that up with a news release just recently here highlighting the potential for Baptiste to be a carbon neutral operation. Can you talk to us a little bit about what that means for shareholders?
Yeah, so this is an area we've been studying now for over 4 years with the University of British Columbia, and that is research into the particular mineralogical characteristics at our nickel deposit that will allow it, we believe, to sequester large amounts of carbon dioxide as a natural consequence of the mining and processing of our nickel deposit. And so what the academics at UBC who've been researching this for several years believe is that if and when this project goes into production, there will be a sufficient natural sequestration of carbon dioxide in our waste and tailings material that this would actually be a carbon neutral operation. And so when you think about that in the context of this sort of EV narrative, it's very, I think, significant. Of course, people want to buy EVs, and governments generally are moving towards EVs in order to reduce the carbon footprint of humanity, to mitigate global climate change. However, if those EVs are being powered by metals that are ultimately derived from very polluting sources, from places like Indonesia, for example, then the net benefit of owning an EV from a carbon footprint standpoint is potentially negligible. That is, that there can be so much carbon emitted through the mining process to get that nickel that, you know, the consumer at the end of the day may actually be adding to the net carbon footprint if he's buying an EV that's powered by metals that were mined in an irresponsible fashion. The ability that we have here to demonstrate that we can produce nickel for that market from a source that is ultimately carbon neutral is utterly unique in the marketplace. And when we think about the major mining companies out there, most of them have in the last year or so said that they want to make their operations carbon neutral. They want all of their mines to be carbon neutral going forward, but they haven't put a lot of meat on the bone yet in terms of how they're going to go about doing that. And so we view our project, our Dakar project and the Baptiste deposit specifically, as fitting into that solution going forward for having carbon neutral or low carbon emitting mines that produce the critical minerals like nickel that are required to power that sort of green energy future.
Great. I saw a nice reaction from the market when you put that out here in November. So I also encourage anyone listening to check out that press release. It's pretty detailed and some really good information there. Lastly, you know, how much, I saw that you raised cash, obviously in October, I think it was around 5 million, you know, with no warrants, which I'll mention, which I think is great. You know, there's so many companies, you know, taking advantage of the wonderful environment we've had here for metals and mining from, you know, call it March till today, but a lot of them are doing it with warrants, even full warrants, and you've done them with no warrants historically, which, you know, we applaud as shareholders. So how much cash do you have right now? And you know, what are your plans for advancing something like Baptiste?
Sure. So yeah, we've got about just over 6 million in the bank right now. So we're fully funded for our planned activities in 2021. You know, that will include further work on this idea of carbon sequestration and developing this as a carbon neutral mine. Further work as well on demonstrating that we can produce nickel in an ideal form for the EV battery market. But the thing that we may be most excited about is drilling at a brand new target at our project. So we control a land package at Dakar that covers 245 square kilometers. So it's a very large land package.
Sure.
The main deposit that we've identified there to date is called Baptiste. And Baptiste is one of the largest nickel deposits in the world. 6 kilometers away from Baptiste, within that overall land package that we control, we have another target called Van, which has never been drilled. But based on our geological interpretations to date, we believe that the Van target has the potential to be potentially larger and potentially higher grade than what we already have at Baptiste. So we will be going up next summer. Our plans are to do the first drill programs at that Van target, which may, you know, if they are positive, if they come successful, could demonstrate that we have not just one but potentially 2 world-class, you know, nickel deposits within the single land package. So we're particularly excited about that, and that's part of the reason for raising that money recently.
Do you think that the 2 analysts we talked about are taking that into effect right now with their price targets, or?
No, I don't. You know, they're aware of it, and I think the market is very vaguely aware that we have these other targets that we can explore and drill on. As I said earlier, the economic study that we just did on the main deposit, Baptiste, yields an NPV that is, you know, 20 times what our current market capitalization is.
Right.
And so we think we're undervalued on the basis of simply that existing deposit, and that there's no blue sky being attached to this exploration potential to delineate another deposit that is potentially richer and or larger than the first deposit, than Baptiste. So yeah, we think there's a lot of you know, blue sky around that target that we can tease out and hopefully get some recognition in the market for it.
Lastly, you mentioned that the current price Canadian for FPX is in the 50 to 55 cent range. What was the offering price in the recent financing?
Yeah, the offering price was at 55 cents,
Okay.
as you noted. So yeah, we raised just under 5 million at 55 cents. And as you noted, again, there were no warrants attached to it. So, we've seen, I think, generally speaking, in the mining market, a bit of softness here through October and the early part of November, and that has kind of impacted our share price a little bit. It's providing people an opportunity right now to buy the stock at a discount to what the recently closed financing was completed at.
Great. Well, anything else you'd like to add, Martin, before we sign off?
No, I think, we're in a position now where we have more money in the bank than we've had in many, many years, and we're just really excited to get into 2021 here and to continue to advance this and crystallize some of that value that I think we've unearthed with this recent economic study.
I think you guys are well positioned, and the recent financing to see it get down to 55 cents Canadian was a little surprising to me because there were no warrants. You would expect that with warrants, but I think the selling is a little overdone in my view. And so, we have, in full disclosure, been buying at these levels. I think very highly of what you guys are doing, and congratulations on the both releases in September and November, and good luck going into 2021.
Great. Thanks, Sean. Appreciate it.
No problem. If you guys want to learn more about what we do, it's feneckconsulting.com, FENECK consulting.com. And if you want to check out Martin's website, again, it's fpxnickel.com. Thanks so much, everyone. Have a good one.